This is, of course, this is what I do, and quite a growing field. Actually, this concept is definitely borrowed from the Western countries. The idea was simple that, right now, because of regulations, because of economic scenarios, because of uncertainties, even smaller businesses need some sort of financial expertise. Gone were the days where the businesses were simple, where the businesses were much more, especially when it comes to India, it were dominated through simple exchange of goods and money, and it was purely trading businesses. But now the businesses are becoming much more complicated, nuanced, with innovative ideas, be it manufacturing, be it technology, be it healthcare, pharma. So what happens is that when you have innovative idea, but as a founder, if you have limited expertise towards finance and regulation to navigate those ideas and ensure that you are not misguided, or you are not going wrong in terms of finance, tax, compliance, you need a partner. You need a partner who can actually understand those things, and help you guide in those things. Okay. But of course, those partners who are typically called as chief financial officers in the lens of industry come with a huge cost. Okay, why? Because uh, it's simple. The opportunity cost for those people are huge if they are working in a particular industry and earning amount of, say, for example, an annual package of, let's say, 60 lakhs, 80 lakhs, 1 cr, 1.5 cr. Then of course, why would they come for a small businesses? Okay. So that's where this concept came, which is commonly known as virtual CFO or CFO services, where the idea was simple that why can't we provide same set of acumen, same set of advice, same sort of services which are required by these small size founders, startups, SMEs as well. Why? Because complexity is not something that is only applicable at listed company level or huge businesses level. Complexities are also applicable to startups or SMEs who are dealing with certain set of businesses, who are dealing with in a certain set of economic scenario, in a regulated scenario. So that's where this concept came of virtual CFO, where we basically help not a single company, but multiple companies navigate their businesses while they focus on growth, while they focus on actually making the business monetizable and a growing business. We focus to ensure that that growth is supported strongly by a healthy finance position, protected from tax exposure, and ensure that they are completely compliant. So that is the concept of virtual CFO, the fractional finance leader for growing businesses. What it is, a senior finance professional hired part-time or contractually by SMEs, startups, or family businesses that can't afford a full-time CFO. That's a basic, clean vanilla definition. The opportunity, as I mentioned, India is actually performing on the backbone of SMEs. So we have 5 million plus SMEs in India who actually need this kind of finance leadership. These fees are indicative fees. It actually depends on startup to startup, SME to SME, their size, their complexity, their time involvement. But typically, retainers work around 1 lakh to 5 lakh per month per client. It's growing fast. Of course, the startup ecosystem is driving this demand, because day in, day out, new startups are coming with new innovative ideas. And at the same time, our regulatory authorities, be it SEBI, RBI, Companies Act, Income Tax Act, also keeps on coming with a new regulative provisions, considerations, etc. To help startups navigate through these complexities, finance professionals are required. Especially nowadays, the cross-border advisory is picking up its pace, where global investors are interested in India. So now, if a startup is raising funds from global investors, then who will take care, or who will help startup understand the nuances of Foreign Exchange Management Act, because foreign exchange is involved. Provisions of transfer pricing. For example, if startup is setting up its separate subsidiary outside India, then what should be the structure of that subsidiary? What are the transfer pricing provisions applicable? So all these complexities startup faces, and the idea is simple, that the business shouldn't be slowed down or hindered merely because they don't have expertise in finance, tax, or compliance. So that's where people or consultants like us come and ensure that you focus on the business. We will navigate all the complexities that you may come across when it comes to finance, tax, or compliance. Again, skills required. The CA, of course, CFA, especially when you are dealing with capital transactions in these startups, CFA becomes much more relevant. MBA has also become relevant, especially from when you are advising startups on business lens, marketing, sales, purchase, HR. That's where MBA comes into picture. MIS setup, MIS, of course, it's important because MIS is just typically, as I mentioned, like in FP&A, MIS gives you idea as to how is your business performing. At, for example, at startup level, how is their unit economics performing? What is the cost of acquisition for acquiring a particular customer? So how is their unit economics and cost of acquisition is compared against each other, so that to ensure that the startup is not burning money, and if at all they are burning money, then that decision of burning money is a wise call. In the basically, if they foresee that burning money right now will give us a lot more major market share or a lot of traction in the business in the future, then of course in some cases initially burning money also makes sense. Startup finance, as I mentioned, it's typically dealing around helping startups navigate the complexity of finance and supporting them in their fundraise journey. So a lot of times, startup may have identified the investor, but startup don't know how to answer the questions of investors. Investors may ask questions like, "What is your working capital requirement? What is your unit economics? What is your cost of acquiring customer? Do you have what is your days of receivable? What is your days of payable, etc." So that's where startup require people like us who can guide the questions of investors, who can facilitate the due diligence that is being done by the investors, and ensure that the fundraise is smooth and startup receive the funds at their chosen valuation number. Communication is very important, because if you are working with startup and where startup is working with investors, communication becomes much more important when you're presenting the performance of startup to investors, when you're negotiating the valuation on behalf of startup with investors. So in all those cases, the skills of communication negotiation are of tremendous importance. What you actually do, you basically set up the performance management system in the form of MIS and reporting from scratch. You advise on fundraising, as I mentioned, the pitch decks, the cap table, the safe. Or safe is basically a sort of equity instrument. So what is a mode of instrument that you should be focusing on? Equity, preference share, debt, then convertible, non-convertible. What is an ideal instrument basis the requirement of startup and the business? Manage statutory compliances and auditor coordination, because if you are working as a CFO for a particular startup, then you need to navigate also the auditors and statutory compliances, be it taxes, labor laws, companies act compliances. Implement cost controls and cash runway management, because typically startups always generally burn money in the initial phase of their journey. So to navigate that burn, we need to manage the runway, because they have limited set of amount being raised from investors, and to ensure that the amount is not just haphazardly burnt, it's important to manage that runway of the cash they have. Represent company to banks, VCs, and board, as I mentioned. So if you're, let's say, if you want to raise debt or working capital, then you have to represent the startup or the SME to the bank. If you are looking to raise funds, then you have to represent the company before VCs, angel investors, family offices, private equity players, and ultimately board. So once you're actually done with fundraise, what happens is investor takes a board seat. Then sometimes startups have their senior board advisor. Then the founders itself are on the board. So what happens is after a certain point of time, the startup or the SMEs become much more professionalized and have their own board of directors or board of professionals. So being a CFO, you have to represent startups before that board to ensure so that the entire board has a confidence within the company, and they also have a confidence that everything is going smoothly, and if at all there are any challenges, then the board together takes a decision to resolve the any challenges that are being faced by the company. So this is with respect to virtual CFO and or virtual CFO, CFO services, fractional CFO. There are all these interchangeable words that are being used in the industry. Any question around this?
I mean, looking at this, it seems it requires quite a bit of experience, like a decade or at least half a decade of experience to even just qualify for something like this. Would I be right to say that?
Uh, so if you see practicing CAs, okay, so the chartered accountants who start their practice, so they have this set of articleship experience or internship experience, and they start their practice, okay, be it in traditional domains of income tax or GST, etc. So what happens is that you can also start your vCFO practice maybe after qualification, or probably say after having industry experience of, let's say, 3 to 5 years, and after that as well. So the idea here is that when you want to advise startups who are in their initial phase of journey, who are SMEs who are typically nascent and small in size, at that point of time, your acumen, your ability to understand their business itself would be a much more will basically do the heavy lifting for you. Okay. Yes, of course. At the initial stage, you won't be able to advise people on, or startups or SMEs on, complicated fundraising transactions because you don't have that expertise. So in that cases, what you can do is you can always collaborate with industry professionals or people who are experienced in the business. Okay, so that you don't lose the relationship, but at the same time ensure that the startup or the SME deserves and gets what they want, and you basically represent the company and collaborate with investment professionals or senior professionals in the industry, and ensure that the objectives and the results are achieved, whatever you have desired for that particular startup or SME.
I have one question regarding to this. How to stand out for this role as a CFO?
So what you can do is to stand out, you need to carve your own niche. Okay, because as I mentioned, the complications are day by day increasing. So you can either create a niche in a particular set of service, for example, cross-border advisory, or fundraising, or M&A, or even something like transfer pricing, international tax, or you can have expertise in terms of industry. So for, let's say, where you are focusing only on manufacturing companies as a target, or let's say tech companies as a target, or healthcare companies as a target. Okay, so in these cases, what you can do is you can focus on a particular industry or a particular service, develop your niche around that service, become known for that particular service or industry, and then gradually expand your breadth.
How to develop the skills for this types of role like consultants and FNO?
So firstly, learning. For no, not even learning. Actually, first you need to define your focus. Okay, as I mentioned, for example, in service, let's say you want to focus on cross-border advisory, for an example. Okay, so first you have to think that, okay, do you have any experience in cross-border advisory? Yes or no. If, for example, you have the experience, then you can basically start being visible, start writing on cross-border advisory across LinkedIn, in some professional articles, etc. In a case where, let's say, you don't have expertise but you have interest in cross-border advisory, what you can do is you can initially work with some professional firms in the market. It can be big four or mid-size. I would prefer mid-size, because in mid-size what happens is you get a lot of learning, and you are not boxed out in a particular set of transaction, but you get a breadth of learning in mid-size companies, or basically mid-sized firms. So that's where you basically learn there for a few years and then start your own practice. Or simultaneously, or basically what you can do is you can collaborate with these people, where you can say that, okay, help us, or basically on relationship basis, you can let them know that I want to learn cross-border advisory. So, whenever there is an opportunity to work together on certain specific assignments which involves cross-border advisory, please let me know, and then you can collaborate on certain set of assignments and get that experience, and then you can start your practice.
So what is the cross-border advisory?
See, cross-border advisory is, for example, if, let's say, a startup or SME in India is raising funds from investor outside India. Okay, so there are a lot of complications takes place, because there is a regulation from FEMA, foreign exchange, because you are raising foreign exchange from a person outside India. Okay, so there are a lot of regulations that needs to be followed from FEMA point of view. Second, let's say a scenario where if a startup is setting up a particular subsidiary or a particular business unit outside India to, expand their business globally, then you have to advise the startup or SME that what should be the nature of that, business unit outside India. Should it be a branch? Should it be a subsidiary? And how do you actually move the funds from India to that external country? So that's where again there are a lot of regulations that comes into picture from FEMA point of view. And if there is a subsidiary, then there is also a lot of regulation from transfer pricing point of view. So cross-border advisory involves much more application of existing regulations, typically transfer pricing or under Income Tax Act, FEMA, and other Companies Act mandates or Companies Act regulations. So you have to ensure that all these regulations and compliances are complied, or else the cost of going wrong in cross border is very much high, because the penalties, the fines are huge for a startup, and even in some cases investor as well. So even investor is very cautious and ensures there is a an experienced, well learned professional who is navigating this cross border transaction.
Sir, I had one question. So you've defined, are these all the roles that you want to talk about today in today's presentation?
Not actually. See, the rules. I mean, that's an ocean of rules. It depends on the kind of SME or a manufacturing. I mean, SME or startup company that are working with. But just to give an idea that if you, for example, want to set up a CFO practice, okay, a typical set of regulations that you need to have command is firstly the Income Tax Act, 2025 now. Second is the Companies Act 2013, then Foreign Exchange Management Act, then labor laws, because even now labor laws are getting much more challenged, and they keep on changing. So there's a complexity there as well. And depending on sometimes depending on industry as well. So for example, fintech as an industry, it's very regulated, because then there you have provisions by RBI as well, right? So depending on the company to company, situation to situation, you need to have knowledge of plethora of rules and regulations. However, it's not necessary that you need to have all those rules by heart, or it's like in your memory, okay? But you should have the ability to navigate towards those rules and provisions, okay? So it's also, for example, if you are dealing in a particular M&A transaction, okay, it's not necessary that you need to have a complete end-to-end knowledge of Companies Act by heart, okay? But you should know that how can you help startup or SME navigate the provisions of Companies Act 2013, for example.